Hi, welcome to Curious Bricks. Today we're going to talk about Shopify, ticker symbol SHOP, Q3 2020 earnings report. This earnings call was hosted on October 29, 2020. Shopify is part of a Toronto Stock Exchange 60 index under the information technology sector. Since this is our first time covering Shopify, we will start with a quick overview of what Shopify does and how they make money. Shopify is one of the leading e-commerce companies in Canada. The company was founded in 2006, and it reported annual revenue of $1.6 billion in fiscal year 2019. Shopify sells products and services to help entrepreneurs and businesses to set up their online retail channel. Currently, there are over 1 million merchants across 175 countries on Shopify's platform. The company makes money from two avenues. The subscription solutions segment reported $640 million revenue in fiscal year 2019. This segment operates a subscription model which charges monthly or annual fees to the merchants to access its platform. Most merchants subscribe to the basic Shopify plan, but majority of the gross merchandise volume or GMP comes from the customers using Advanced and Shopify Plus plans. Moving to the merchant solutions segment. This segment represents roughly $1 billion revenue, and it makes money primarily from the payment processing fees from Shopify Payments. Shopify also offers other services under this segment. Amazon and eBay are the primary competitors that offer similar services, while Adobe and Square compete on certain niche markets with Shopify. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 31st, 2020, Shopify share price is $1,132, and its market cap stands at $137 billion. The trailing price-earning ratio is around 699. Currently, Shopify does not pay out any dividends. As of December 15th, the short interest ratio is only 1% of total floating shares. Now, let's take a look at their latest quarterly financials. We will start with the income statement. In this quarter, Shopify reported total revenue of $767 million, which is 96% higher than the same period last year. The subscription solutions revenue growth is driven by more merchants joining the platform. The merchant solutions revenue growth is driven primarily by the strong growth of GMV. In comparison to the rapid growth of revenue, the operating expenses only increased at a modest pace. In summary, Shopify reported operating income of $50 million, which is a significant improvement from a year ago. Now moving to the balance sheet. Shopify increased its cash on hand and marketable securities by $3.6 billion to a total of $6.1 billion from the end of 2019. The increase of cash comes from the recent public offerings in May and September this year. Meanwhile, long-term debt only increased to $750 million. Overall, the company's liquidity is extremely strong. During this call, the management highlighted that there were a record number of new merchants that became paid subscribers in Q3, driven by extended 90-day free trial promotion, but they do not anticipate such high level of growth rate to remain in Q4. The management also mentioned that Shopify Pay and Shop App continue to gain traction in this quarter. Lastly, the management reported that more than half of the eligible merchants in the US and Canada adopted Shopify Shipping in this quarter. The company continues to build the Shopify Fulfillment Network in the US. During the Q&A session, a couple of analysts asked about the latest status of Shopify Fulfillment Network. First of all, 51% merchants started using Shopify Shipping in this quarter, up from 45% from a year ago. The company is still laying out foundation for the Shopify Fulfillment Network, and it plans to run experiments to figure out which merchants should put which products in SFN. The goal is to scale up SFN in 2021. One analyst was also interested in knowing if there are any plans to deploy the large amount of cash on the balance sheet. The management responded that cash reserve provides optionality, but Toby, the founder CEO, is not a big fan of M&A for acquiring revenue. Lastly, one analyst was impressed with the efficiency of sales marketing spend in this quarter and wondered if the trend would continue. The management responded that the sales marketing efficiency was driven by significant growth in revenue. In this quarter, the company reduced event marketing. Also, they have been intentional about the brand and studio spend into COVID. Instead, the company was focusing more on immediate needs of the merchants with programs like 90-day free trial promotion. Now, let's take a look at Shopify's stock performance before and after the earnings call. Shopify reported quarterly revenue of $767 million, beat analysts' expectation of $653 million, and its adjusted EPS of $1.13 also beat the consensus of 51 cents. However, the market had quite a negative reaction after the earnings release. Lastly, here is the latest summary of analyst ratings of the company. As of December, there were 34 analysts covering Shopify, and we are seeing half of the analysts gave the rating of hold, and quite a number of analysts gave the rating of buy and strong buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.